And we are live. What's up, guys? I'm nobody special. Welcome to Power Hour. It is that time again. The final hour of trading to end the week. What a week it has been. There was a lot of news this week. I am back home, back in my cozy little office. Thank God I finally am out of Atlanta. You may have noticed a little change in the background over the last few days. I was on a road trip for the day job because my YouTube channel has not become so immensely successful yet that I am in a position to do this full time. But hey, life goals, right? It's a good time to remember to like and subscribe and hit that notification bell. We finally got the taper this week. It was announced. It's going to happen. You know, we've been debating whether or not it was going to happen, and are we talking about, or thinking about. Well, the taper's finally here, and nothing happened. The market just kind of took it in stride and said, forget your taper, forget your quantitative easing, on to new highs every day. Stocks only ever go up, right? Not so much, but we'll get to that in a little bit. Hello, Gigi. Happy Friday. Thank you for joining, everybody. We're going to get right into it, and there is one story that I just found so riveting and so mind-boggling that I just had to bring it to you guys first on the live stream. Prepare to have your melon head blown. Doug, the mutant spud, could be the world's heaviest potato at nearly 8 kilograms. And for those who don't habla metric, that's about 17 pounds. That is a big freaking potato. Look at that ridiculous thing. A potato from Britain has been in the Guinness Book of World Records since 2011 as the world's heaviest, but at a mere 4.98 kilograms or 10 pounds. Well, King Potato, your reign is about to come to an end because here comes Doug, the 8 kilogram, 17 pound potato. I found this story to be so hilarious. I know this is not financial, but bear with me, folks. This story is great, and it just gets better and better the more you read. A small farm owner weeding his garden got a giant surprise when his hoe struck an object beneath the soil surface. Apparently, this British farmer is a total gangster because he's got his hoe out working in the garden with him. At first, Colin Craig Brown thought it might be some strange fungal growth. Okay, keep in mind, he thinks it's a fungus. But after digging it out, scratching the skin surface, and tasting it, he realized it was a monster potato. Now, I feel like some of you may not be taking the walk with me here, so I want to back that up a little bit. At first, he thought it was some strange fungal growth, so he did what any natural, cautious human being would do. He tasted it. Because I don't know about you, when I find a 17-pound fungal Doug in my garden, the first thing I do is take a bite out of it, and then I figure out what it is. This guy's nuts. We couldn't believe it, his wife Donna said. It was just huge. The couple from Hamilton, New Zealand, I'm sorry, I said he was from the UK, he's from New Zealand, believed the potato was self-sown and may have been growing for a couple of years or more. After weighing it out, it came in at 17.2 pounds and has made it into the Guinness Book of World Records as the world's heaviest potato. Wouldn't it be funny if it missed the world's heaviest potato by like a half an ounce because Colin took a bite out of it while he was trying to figure out what it was? The current record was set in 2011 by a mere 10 pounds, 14 ounces. Since deciding to call their mutant-looking vegetable Doug, it's been enjoying a bit of celebrity status. They've built a small cart to tow the ugly potato around town. This reminds me of Joe Dirt with his Meteor. Ended up being a Boeing bomb. I don't know if you guys saw that movie. Great movie. We put a hat on him. We put him on Facebook, taking him for a walk, giving him some sunshine, Mr. Craig Brown said. It's all a bit of fun. It's amazing what entertains people. But the monster find is proving difficult to look after as it begins to dry out and get moldy. Poor fungal Doug is getting moldy. Cut down before his time, in his prime. He had so much of his spud life ahead of him. Mr. Craig Brown insists that the potato has not had its chips yet. Very clever. He's left it in its fridge and plans to turn it into potato vodka. All right, that's interesting. He has no special tips for other gardeners who want to grow giant vegetables. And this is great. Other than to throw a load of cow manure and straw in the garden and see what happens. Yes, first, spread cow dung all over your garden. And then if any fungus grows out of it, take a bite out of it and then figure out what it is. All right, Colin. You are today's Darwin Award winner. I just found this story so ridiculous that I just had to share it with you guys. Hence today's Wi-Fi password, Fungal Doug. Note to self, if you dig up a big fungal Doug in your garden, figure out what it is and then take a bite out of it. Anyways, thank you guys for bearing with me, for humoring me. I just love that. And look at that gargantuan... It looks like that orc from Return of the King. You know, the guy with the tumors all over the side of his face? Yeah, that's what it looks like. Anyway, there's Doug. Moving on from Fungal Doug. So, on to the business news. We got our jobs report today, and let's shrink me a little bit so you guys can see. It was a heck of a jobs report today. 531,000 jobs added in October. Way more than expected. And you're also going to see that a lot of the previous months, what we thought were very disappointing jobs reports, have been revised upward in a big way. So, a lot of job creation going on. But when we get into it a little bit, there is not all shiny roses in the jobs report. There's some alarming data in here. But first, the good news. 531,000 jobs versus 450,000 expected. So that is a big beat. Unemployment rate fell to 4.6%, which is a new low from the pandemic. So now, again, that is a low. That's a percentage. You have to keep in mind that is partially offset by a lot of people have left the workforce. Okay, so the labor force participation rate, the amount of people that are trying to work, is still pretty low. But, again, that is a very good looking unemployment number. Wages rose 0.4% from the month. That is a healthy increase, up 4.9% from a year ago. But I would add that a 4.9% annual wage increase is still below even the official government numbers for inflation, right? The CPI index is still around 5.4, and as many of you pointed out, CPI tends to grossly understate the rate of inflation. So again, wages are going up, but they're going up slower than inflation, and that is people's lives getting harder. Most of the jobs were in leisure and hospitality, followed by professional and business services and manufacturing. So leisure and hospitality tend to be the lower paying end of the spectrum. Professional and business services and manufacturing tend to be better paying jobs. So it's a pretty even distribution of well paying and lower paying jobs. And, you know, we would expect this, right? Because the expanded unemployment benefits from the pandemic have expired, at least in most states. Some states implemented their own unemployment benefits when the federal ones expired. So I've been expecting a surge of new jobs as more people re-entered the workforce. I'm kind of surprised it's taken as long as it have. I thought we would see it instantly, but it's been delayed by about 2 months. Remember, those benefits expired at the beginning of September. It is now the beginning of November, so it took 2 months for that information to show up in the data. But hey. Now, there's something I want to point out here, and this story came out yesterday. U.S. labor costs surge in the third quarter and productivity falls sharply. Now, this is a big deal. If you've been following my channel since the summertime, I've been talking about how wages need to rise. Not just whether people deserve a wage and not because of some political belief in a living wage or anything like that, just because of economic conditions. If you want to convince people to part with their time, you need to make it worth their while. You need to convince people through a high enough wage to give you their time to work at your business. And with the cost of living going up, that meant the cost of people's time was going up too. And it's taken a while. It really hasn't shown, but we're starting to see the labor costs go up. We're starting to see the wages rise, still below the rate of inflation. So people's lives are still getting harder. But there's some numbers in here that I want to talk about. U.S. unit labor costs surged in the third quarter while productivity declined at its sharpest pace since 1981, adding to signs that high inflation could last for a while. Now, this opening paragraph, you got to understand the profundity of this statement, okay? This is a big deal. Labor costs are going up. Productivity is going down, okay? That is hyper inflationary. Okay, when your cost of a worker is going up and you're getting less economic output from that worker in exchange for more money, what do you have to do to your prices now? If you want to keep your business profitable, you got to jack up your prices. And if the labor's getting more expensive and you're getting less output out of it, oh boy, you're going to have to raise your prices a lot. So this first paragraph, this is telling me that inflation, what we all know, it's not transitory, it's not temporary, it's going to get worse because help is getting more expensive and it's getting less helpful. Labor Department said on Thursday that unit labor costs, the price of labor per single unit of output, increased 8.3% annualized rate last quarter, after rising at a 1.1% pace in the April to June quarter. I want to scroll down a little bit more. Where was it? Hourly compensation increased at a 2.9% rate in the third quarter after rising at a 3.5% pace the prior period. The surge in labor costs came at the expense of worker productivity, which fell at a 5% rate last quarter. That was the biggest drop since the second quarter of 1981 and followed a 2.4% growth pace in April to June period. And remember, second quarter of 1981, that is like peak inflation years. That is as Paul Volcker was cranking up the interest rates to fight inflation, right? Interest rates went up to 15, 20%, some ridiculous level. So, folks, these productivity drops and these wage increases, this is future inflation, what you're seeing here, all right? Now, one of the themes you're going to see repeated in a couple of stories is some of these numbers is tomorrow's prices going up, and we're going to get to that in the food subject in a little bit too. So keep that in mind. That worries me, that story. Wages going up and productivity going down. Not that people don't deserve a raise. Again, I don't want to stoke any kind of like angst here or anything like that. This is just, we're looking at this purely economically, not emotionally, all right? When wages go up and productivity goes down, that means your prices have to go up. Your prices have to go up. Anyways, let's check out a couple of comments. Have a nice weekend to all. Thanks, Mr. Nobody, for all his great work. Mars, thank you for your kind words, sir. Welcome back home. Hugh Allbrooks. Oh, so mutant potatoes are going to solve the world hunger problem. mRNA food technology. Yes, Hugh, there's some serious Monsanto genetic engineering going on with Doug, the fungal spud, over in New Zealand. That thing is hideous. Swedish Doom Goblin says, yeah, but they're all BS seasonal jobs. I do think there was a little bit of seasonality reflected in that. Again, they do their seasonal adjustment thing to the numbers, so you always have to take these statistics with a little bit of a grain of salt because they do play with them a little bit. But you can't fudge economic growth. You can't. And anyway. No cow dung fungus turned into psychedelic mushrooms. Taste test with caution. Thank you, Hugh. Hugh, you got a couple of good ones today. Rich Dyer, congrats on 3,000 subs. Thank you, Rich. Thank you for being one of them. And welcome to all the new people. If you're new to this channel, thank you for subscribing, and I shall strive to make it worth your time. Do you watch Greg Manarino? I have seen Greg Manarino. I don't watch religiously. I find myself following so many YouTube channels lately, and I just don't have enough hours in the day to consume it all. I try. All right. Dumb Money Media, sir, thank you very much for the super chat and for supporting the channel. Again, inflation isn't real if you close your eyes and cry in the shower. That's what I do when I see it. If you find yourself in a fetal position, sucking your thumb, muttering something about a happy place in the shower, you know hyperinflation has finally set in. Thank you, Dumb Money Media. By the way, I don't know if you saw Rob Keentz's live stream from, I believe it was Wednesday night, but he mentioned you in that live stream. Go check that out. Highly recommend that channel also. Lynn William, your comments on labor, good points. Would this suggest a turn to technology? Yeah, we're kind of seeing that already, like in the fast food industry. That's been going on a lot with the touchscreen ordering and things like that. Technology is always going to be there to offset wage increases. But I don't subscribe to the Andrew Yang technology is going to put us all out of work mentality. All right. I think that's pretty arrogant, to be honest with you. Not arrogant. I think it's condescending. It's very elitist. Now, I don't want to not to say anything too nasty about Andrew Yang. I mean, he seems like a nice guy when he talks. But here's the thing, right? Every technology has displaced labor that has ever come out, right? We used to be hunter-gatherers, right? We used to spend all day stalking and clubbing or picking our food, right? And then farming came along, and it put most of the hunter-gatherers out of business, didn't it? But does that mean the hunter-gatherers had nothing to do? No, they became farmers. They started doing something else. And then along comes the Industrial Revolution, and now we have tractors and heavy farm equipment that makes one farmer as productive as 100. And a lot of farmers went out of business. Are all those people unemployed now? No. We have entirely new industries now, both building the tractors and building the farm equipment. And now people have time for things like services. People have time for music and art and entertainment. Entire new industries sprang up because people had time to go do something else that was productive, that provided a value that people were willing to trade money for. So the idea that technology is going to put everybody out of work and therefore everybody is going to be broke and bored, I think it's a little condescending to people, right? I think most people will figure out something to do with themselves that provides a value to somebody else in exchange for a wage. I think that. I think there are going to be whole other entirely new industries that are going to spring up, and that people's overall quality of life will improve. And that's what technology has done. It has displaced a lot of workers. It has created entirely new industries, and people's quality of life has gone up. So I don't think we need to create universal basic income and pay people to do nothing. I think we have a little faith that people will figure out what to do with themselves. I really do. Anyways, that's just me. Also, Lynn William, you made a comment before we started. Question I hope you will discuss when the market comes. I think you're talking about the market crash or the correction. Are there any sectors that might buck the trend? And then you mentioned Sturm Ruger, and Smith & Wesson. Thank you in advance. So those are firearm stocks. I'm not sure about firearm stocks, whether they're going to buck the trend. There is a Second Amendment case pending in the Supreme Court right now that may affect those stocks. I'm not sure it's going to affect them the way most people think, because nothing is ever, how do I phrase this without getting too controversial and getting myself banned from YouTube? Anti-Second Amendment politicians and legislation tends to be very good for gun sales, right? Barack Obama sold more guns than anyone else who was ever born before, because people thought he was going after them, and so they panicked and they went out and bought them, right? And that's when those stocks did really well. And then during Second Amendment friendly administrations, those stocks didn't do quite as well. So I'm not sure. The Second Amendment really isn't at the forefront of politics right now. So I'm not sure those particular ones are going to do that well. Okay. And again, if there's a breakthrough case that comes out of the Supreme Court in a Second Amendment friendly direction, I'm not sure that's going to have the effect on those stocks either, because, if it comes out, if it rules against the Second Amendment, you'll have more people go out and panic buy. The other way around, I'm not sure there. But I do think there are some sectors that are going to do particularly well in the coming crash. And let me preface everything by saying in the coming crash, everything is going to get sold off. Okay? Everything. Even the good stuff. So I'm still raising cash because I don't want to buy these things now, because I think I'll get a better price if I wait. And that's why I'm taking profits in stocks where I can while I'm accumulating cash. There are some trades I'm looking at, but for the most part, I'm not buying much of anything right now. Because we see it with precious metals. They sold off in March of 2020, right? They came roaring back, but you had an opportunity to get in at a very low price if you waited till the sell-off happened. So some of the things I'm watching, I'm definitely watching precious metals. I'm definitely watching energy, and I'm watching agriculture. Because I think after this crash, I think the market reaction or I should say the Fed's reaction is going to be to print like never before. And, look, what's going on right now, everybody's like Jerome Powell and his printer. There was a meeting today at the White House between President Biden, Jerome Powell, and Lael Brainerd. Okay? If you think Jerome Powell and his money printer was bad, wait till you see what happens, what a Fed chairman, Lael Brainerd, might do. Because she makes Powell look like a hawk. All right? And right now, one or the other is going to be the next Fed chairman. All right? We don't know who Biden is going to nominate to head the Fed. I believe it's in February. That nomination is up. It's either going to be Powell again or Brainerd. And if it's Brainerd, modern monetary theory is coming to the forefront of all monetary policy in this country. And they are going to print like you wouldn't believe. And if it's Powell again, well, then Powell will just do what he's doing. He'll keep going with the taper and the plan on the eventual rate hikes. But we know where that's going to lead. All right. We've been following the story. We know Powell's rate hikes and Powell's taper is going to cause a market panic. And maybe by playing that hand close, waxing political here a little bit, but what Biden's probably going to do is he's going to wait and see if the market panics between now and February. And if the market does panic, he's going to can Powell and he's going to put Brainerd in there. Brainerd's going to go in and she's going to print like crazy. If the market doesn't panic, he'll probably keep Powell in there. I don't know. Powell's the thing with the insider trading and everything. Look, I knock Powell as much as the next guy on YouTube. I think his money printing is going to go down in history as a colossal blunder. But at the same time, there's the devil you know. And at least with Powell, we know he wants to go in a hawkish direction. Brainerd doesn't even want to. Brainerd doesn't even want to try. Brainerd wants to print and print and print and print forever. All right? So be careful what you wish for in that department. Anyways, I got a little off target there. Let me, on that talk, oh, sorry, Dumb Money Media, yeah, I sent him a silver Goku statue. Dumb Money Media, sir, thank you again for the super chat and for supporting the channel. I sent him a silver Goku statue. That is awesome. Chris asked me to work on some vids for First Majestic, Arcana, Suma, and a few others. The Silver Viper one is done, though, so that's what I'm doing right now. I really liked your video that you did for Silverfest. Guys, if you don't follow Dumb Money Media's channel, check him out. He is a newer YouTube channel, but he makes some off-the-wall, we'll say, videos typically centered around silver and precious metals, and I find them very entertaining. And Don T77, sir, thank you also for the super chat. Thanks for digging into the Evergrande non-payment story earlier this week. Off topic, are we seeing a blow-off top in the equity markets? Yes, Don. I think we're in the early innings of a blow-off top. That's just my personal opinion here. It's the only explanation, and I did a video about this a few days ago, that with all this bad news that's going on in the market right now, right? The taper, which the taper is not bad news, but the taper is bad news for stocks. Okay, it's long overdue. I think it's a step in the right direction for the country, but it's a bad move for stocks. Stocks go up. China's about to collapse. Stocks go up, right? Apple comes out and says, we're going to have a bad quarter. They're forecasting lower iPhone sales. Stocks go up. All these reasons that the economy is not doing well. The supply chain, right? Energy prices, all things that should be sending stocks down. Inflation, but stocks keep going up. And I've seen this before. My video I did, I think it was on Tuesday or Wednesday. At the beginning of 2020, there was all of this bad news piling up. And it was becoming obvious that there was something seriously big was brewing in China. And stocks just kept making new highs every day, regardless of what happened. And I remember people were so sick of hearing from me. It was before I did my channel, before I started this channel, before I did anything in Wall Street Silver. And people were just sick of me saying, there's something big coming. The market's going to crash. And, my friends are rolling their eyes and they're kicking each other under the table during a card game saying like, oh, here he goes again. And finally, I just said, that's it. When I saw people being welded in their apartments in China, I was like, that's it. I started shorting the S&P 500. And, I bought call options in some inverse ETFs, which, again, a seasoned trader could probably tell me how many different ways I messed up that trade. But I ended up doing about an 8X on that trade. It was the best trade of my life. And then I took all the proceeds from that trade and I rolled it into precious metals when I saw Jerome Powell crank up the printing press and respond to that. And then that did very well. I lost a lot of that this year by betting silver was going to go up. But to answer your question, Don, yes, I think we're in the early innings of a blow off top where markets should be heading lower right now. There are so many bearish pressures on stocks right now, and we're already seeing slowing economic growth, rising labor costs, the price of everything going up, trouble in China, all these reasons stocks should be going down, and they just keep making new highs every day. All right, so something is off, and I could be early, I could be wrong. It could go on for another year, it could go on for another 2 years. But when this blow off top fails, it is going to come down. It's going to fall off a cliff. It's going to fall, and it's going to fall hard, and that's why I keep raising cash. Am I missing out on gains? Maybe, probably. But I'd rather be early than too late. So that's why, yes, Doug, I think we're in the early innings of a blow off top. Guys, thank you very much for the super chats and for supporting the channel and for sending me your questions. Lynn, back to your question. One of the things I'm watching, one of the sectors that I think is well positioned, is agriculture. All right. And I think we're already seeing that because, well, number one, during good times, people need to eat. During bad times, people need to eat, right? So you have inelastic demand. Food is food. People need to eat, whether the economy is good or not. So their market's not going to go away. I also think with this inflation situation going on, I think food prices are going to continue to rise. And then when I saw this fertilizer story started in China and Europe, and it's spreading over here, all right, this is next year's food getting more expensive. We talked about before how, this year's labor getting more expensive means next month's or next year's products getting more expensive. Here's another case where we're starting to see numbers that means tomorrow's prices are going to go up. And I did a video about this last week about how I'm watching corn because, well, let's just get into this article. Nitrogen fertilizer shortage threatens to cut global crop yields, according to CF Industries. Now, let me just say, a minor decrease in global crop yields would be catastrophic for food prices, especially in developing countries, okay? A few percent increase in the price of food means a lot of people starve to death, okay? So this is serious. This could result in social unrest. This could result in famine, in war. This is a very big story, okay? And, I made a video a couple weeks ago about the energy crisis and the prices, and I was kind of angry about how we've cut off research and development and capital expenditure into the fossil fuel industry. And we've done it because of this rosy vision of the future where everybody sustains this modern industrial economy with windmills and solar panels, right? Screw it if it actually works or not. It makes me feel good, and it makes for a good soundbite on TV. So let's just let the whole global infrastructure crumble while we invest money in these pet projects, whether they work or not. Well, this is what happens. This is the result of that. Fertilizer is now not being made, or not enough of it is being made. And because of that, there's not going to be enough fertilizer used next year. So there's going to be less food growing next year, which means people are going to go hungry. This is serious. Let me just read a little bit of this. A shortage of nitrogen fertilizer due to soaring natural gas prices is threatening to reduce global crop yields next year, CF Industries, a major producer of the crop nutrient, said on Thursday. And this is dated yesterday. Okay. European gas prices have jumped amid high demand as economies recover from the pandemic and with below average gas storage levels at the start of the winter heating season. Natural gas is a key input into the production of nitrogen-based fertilizers, and higher costs have caused some producers to cut production. Who's going to get the scarce tons that are out there? There's going to be a lot of unmet demand that's going to be pent up. Chief Executive Tony Will told analysts on a conference call. And so we do think yield is going to be, on a global basis, off next year. Not because of demand destruction, just because there's not enough tons available. So what he's saying is there's not going to be enough food to eat next year. This is next year's food prices going up, folks. This is a big deal. Okay? This is very inflationary. And again, what he's saying, not because of demand destruction, right? You still have people that need to eat. Food demand is inelastic. Well, there's not going to be enough food to meet it. Prices are going to go up. Okay? Now, got a little emotional there. I apologize for that. It's time to turn the emotion off and to talk about a way to trade the trend. All right. Not that I want to profit off of people starving to death, but this is a financial channel, so we're going to do this. And I just want to point to this video. Again, talk about your narcissistic indulgence. Here is me playing a clip of myself during my live stream. Pardon me, folks. But I want to play this clip because I talked about this during my video last week about corn, ticker CORN, which is an ETF that tracks the price of corn, because I think corn is a very nitrogen intense crop. It needs a lot of fertilizer. And in this video, I was talking about how because of rising fertilizer costs, farmers are going to plant more soybeans next year, which doesn't need as much fertilizer, versus corn, and how that's going to cause corn prices to go up. And I was watching this ETF. I just want to play this clip real quick. Bear with me. Now, what would I be looking at here as far as the trade goes? We have a pretty nice little flag pattern developing here. Let's put a line there. Let's put a line down here. So I would be looking for any breakout of this channel, a retest of this line, and then a move up. Okay. So thank you for indulging me there. So I drew this chart. This was the corn ETF, and I talked about a breakout above this channel and then a retest back down. And the reason I draw attention to that is because here is this chart today. And it looks like, here, let's get me out of the way. Folks, we are right there. Right? We broke out of that channel and we're heading back down to a retest. All right, so I'm going to keep an eye on this. I still have not pulled the trigger on this one. And again, I am still in cash raising mode. But if I see this one come down and bounce off of this line around 2015, 2020, and then head back up, I would probably divert some of my recently raised cash into this fund. Again, now I just got to see why my A here. This is only financial edutainment. This is not financial advice. I want you to do your own research, your own DD, arrive at a decision that is right for you based on your unique situation. Okay, this is just what I'm doing and what I'm watching. And so far, we have seen the first half of the technical breakout of that channel. I want to see it retest this line and move above it. And if I see that, then I would pull the trigger on this one. So, I hope that answered the question. Let's expand me here a little bit. Rich Dyer says, silver and gold mining stocks will rebound fast. Rich, I agree. That's another one that I'm watching is the gold and the silver miners. I'm also going to be watching physical gold and silver, which I always preferred. Now, here's the thing. When gold and silver sells off hard, what a lot of the dealers do is they just raise their premiums. So you can't actually get physical gold and silver any cheaper than you could before the sell-off. And it's one of the things that drives me nuts about the precious metals industry. So I am looking into Kinesis money right now. I don't know if any of you guys are involved in Kinesis or not, or even know what Kinesis is. Kinesis is, I was very skeptical of this when I first heard about it. And let me preface by saying I am not in any way compensated by Kinesis, and I don't actually own any Kinesis yet. But it is a cryptocurrency that is backed by physical gold and silver in a vault. And when you hold Kinesis tokens, you are the legal owner of the gold, and you don't pay any storage fees. It's interesting. I could talk about it for hours, but it's free storage. You can buy it at just above spot prices, nowhere near the premiums that the physical people charge. And there's actually a yield. It's very low, but you actually get a yield out of it, and it all has to do with the fees. And it's very liquid. You can very quickly trade it for cash, and they even give you a debit card that you can, on the spot, sell your Kinesis tokens at the spot price pretty much and transfer it into a debit card and then spend dollars right away. It's very interesting. Now, I got very close to buying some of this Kinesis. There's some trouble. There's some issues. It's a new company. It's a new technology. And when I went to fund the account, there were some red flags that went off. So they have some issues they need to work out with their bank transfers and things like that before I can actually endorse it. I really wanted to make a video of myself signing up for it and buying some and using it. But there's some things they need to work out They are supposedly working on these issues, and if they do resolve them, I would gladly make that video. Um, Anyways, have any of you guys used Kinesis before? What do you think? What are your thoughts? If so, I'd love to hear it. I am still skeptical, and I have not jumped in yet, although I was this close. I was this close to doing it. But I hope that before this market crash happens, and I hope that they can resolve these issues so I can be in a position, because there are such low fees. It's actually the cheapest way to buy physical gold and silver, and it's a good way to pile in when the sell-off happens. Anyways, I got a little sidetracked there. Security stocks did well in the last crisis because people were saving money in their homes and worried about crime. That's an interesting theory, Mo Man. I'm still in the cybersecurity ETF hack, HACK. I was pretty close last week to selling that, but I saw some technical things that made me hold it, and I think cybersecurity is one of those industries that's going to do pretty well also. Drew 2F says gold and silver will sell off, but brokers won't sell you physical if they think the price is too low. I agree, Drew. That's hence my whole discussion about Kinesis just now, as I'm hoping it's a way to buy price exposure to gold and silver without taking on too much counterparty risk. Again, if you don't hold it, you don't own it. It's always better to hold the physical, but because of what they do with premiums when the prices sell off, it's a way around that. There's pros and cons to it. Lynn William, what AG stocks are you watching? I personally hold PSLV, AXU, Alexco Resources. I always watch First Majestic. That's one that I like, although I don't hold any First Majestic right now. And I own Endeavor Silver also. I'm still in that one. But there's on the subject of the mining stocks, you want primary silver miners. All right. If you're getting into a mining stock, again, not financial advice, not a financial advisor, all that stuff. CY my A. Avoid any miners with major exposure to base metals, copper, zinc, aluminum. Right. A lot of the silver that comes out of the ground is incidental silver. They're actually mining for copper or zinc, and they also discover silver and sell that. I think with the situation in China, I think those base metal mines are in for a world of hurt, and they're going to shut down. So if you're looking into mining stocks, just make sure that those mining companies make most of their revenue from gold or silver mines. Right? If they get a major chunk of their revenue from copper and zinc or these other base metals, then they're at risk of this construction slowdown in China, because China is this hungry beast that has been fed so much copper and steel and zinc and aluminum and concrete over the last 20 years. All that is about to stop. And that is going to send shockwaves through the metals industry. It's not going to affect precious metals, but it is going to affect the base metals. And if you're not careful buying these mining stocks, you may end up on the wrong side of that. Now, the flip side of that coin is if you pick the right one, if you pick one that produces pure silver and pure gold without too much of that other stuff, when those other mines shut down and their silver supply stops coming out of the ground, you will be perfectly positioned to benefit from the sudden drop in the silver supply. So take a close look at these companies, look at what you're buying, look at where their earnings are coming from, look at the metals that are coming out of the ground. Always do your DD, folks. Don't just pile in because of sector things, right? You want to look very closely at what you're buying. Cheeseburger, sir, thank you very much for the super chat, for supporting the channel. Watch Manarino at 1.75 speed. It's hilarious. Such passion, many anger. All right. I am going to have to watch some Greg Manarino at 1.75. My wife put on a couple of my videos at increased speed, and I got a kick out of that. Yeah, that's interesting. I do like watching like 1.25, 1.5 sometimes. Like some of the channels that I like, the people talk a little slow, and it's, I can speed it up a quarter or a half, and I can save myself some time and still understand everything. At 1.75, that might be interesting. I don't know what I sound like at 1.75. I guess I'll have to check that out. I bet it's pretty ridiculous. But I am writing that down, Cheeseburger. Greg Manarino at 1.75. Thank you again, sir, for the super chat and for supporting the channel. I really appreciate it, guys. All right. I think I am going to shrink my big fat melon of a head, and we are going to move on with some of the stories here. We talked about the corn. Now, I got some questions in a post that I did on my channel, and I want to thank Mr. Steve Omelis. I hope I'm saying that right. Who answered my post. Typically Wednesday or Thursday, I'll put a post on the channel, a text post, asking for your questions in advance if there's something you want to look into. And I got a couple of really good ones today. Steve Omelis said, who will get hit hardest and first by the Fed's taper? Which pension funds needs that MBS gone off their books most badly? Steve, that was an excellent question. Thank you for that. And you kind of alluded to the answer when you went into which pension fund with the MBS. Now, I don't know which pension funds hold the most MBS. It's a good bet CalPERS, right? The California Public Employee Retirement System is probably grossly exposed to mortgage-backed securities. But you're in the right neighborhood. The sector I think is going to be hardest hit by the Fed's taper is CMBS, or commercial mortgage-backed securities. And while we're on the subject, we will add CLOs, or collateralized loan obligations, into that. And that is all securitized real estate in the commercial sector. So think shopping malls, think multi-unit housing, and think hotels. I think that when it pops here in the States, okay, if it pops here in the States, it'll be CMBS that pops. All right. Now, it could be it starts in China with the developer story, and that fails, and then that spreads over to here. Sorry, I bumped the mic there. All right, and then that, I'm not sure what that would look like for us. And I think right now it's more likely that the China contagion reaches us first before something like this happens. However, there are some things going on in the CMBS market that are worrisome. All right, and I want to send a shout out to Mr. John Flynn. Okay, I don't know if you guys know who John Flynn is. But I was doing some research for a video I did a few weeks ago where I went to a mall and I just took some video about stores that were closed and some indicators that things weren't going very well in the mall. And I remember I was sitting there next to my wife doing some of my DD for that post, and I came across this video about a whistleblower named John Flynn, who is involved in some litigation right now alleging that the banks have overstated the income of these malls and these commercial real estate enterprises, that they've overinflated their income in order to get more favorable interest rates on their loans. And it's funny because while I was doing my research, I said to my wife, I said, honey, remember the name John Flynn. Remember me to look into that. And then a few hours after I posted my video in the mall, I got a direct message on Twitter from John Flynn. And I remember saying, wow, that felt like fate, like destiny. You know, maybe I'm looking too much into it. But it had been a few hours earlier that I had said, honey, remember the name John Flynn. And I have learned more about CMBSs in a couple of minor Twitter exchanges with John Flynn than I have in all my hours of doing research on this subject. And I have learned enough to know that I don't know anything about CMBSs and CLOs. Right? Normally, I'll tell you that the world of finance is not nearly as complicated as they want you to believe, that they want you to believe this stuff is too hard for you so that you give them your money for them to manage so they can skim off the top. I think there's a lot of that going on in the financial press and in the financial services industry. However, when it comes to this stuff is complicated. And there's a lot that goes into this stuff. And I have been really scratching my head trying to get my hands around this. But I want to read a couple of things from this article, because I think this is where the taper is going to cause problems. CMBS borrowers face refinancing challenges. Nearly $130 billion in CMBS debt reaches maturity before the end of 2022. Now, if you saw the video I did in the airport yesterday, it was all about how the trouble in the Chinese bond market is driving up borrowing costs. And when interest rates go up, this endless cycle of refinancing expensive debt at a lower interest rate, that comes to a halt. You can't all of a sudden refinance your debt because your new rate is higher, your costs go up. And that's when the music stops. And the CMBS market could be facing that now, right? All of these malls that Nobody's there shopping, but somehow all these stores are still open. There's no legitimate business case for these companies being in business. Well, they have been able to access endless sources of funding from the CMBS and the CLO market. So they can go out and take out loans to keep these malls running, even though they're all losing money. Well, that may be about to come to an end because there's $130 billion of debt coming due before the end of next year. And they may not have that money. And if they don't have that money, they can't just go out and borrow it because now interest rates are higher. Now it's more expensive to borrow it. So we may be nearing the end of the line for the CMBS market. And that wave of mall bankruptcies that should have happened years ago because nobody goes to the freaking mall anymore. The only reason I've gone to the mall in the last few years was to make a video about how nobody's going to the mall. Anyways, CMBS maturities looming in 2021 and 2022 could prove to be the tipping point for some assets. Given the distress still rippling through the retail and hotel sectors, some borrowers will have a tough time finding new capital. We're going to see some loans come up for maturity that won't pay off, aka default, says Melissa Che, a senior director at U.S. CMBS Group at Fitch Ratings. According to Fitch, approximately $7.5 billion of performing loans within the Fitch-rated U.S. CMBS 2.0 conduit, whatever that is, and Freddie Mac universe, are scheduled to mature through the remainder of 2021. So that's $7.5 billion that's due before the end of this year. There's only about when is this? This is dated in June. Okay, so this is a little old. But there's something I want to talk about here. All right. As of May, there was an estimated $71.4 billion in maturities for all of 2021 and another $58.5 billion teed up for 2022. Although it sounds daunting, the load of maturities ahead over the next 18 months is not as dire as the wall of maturities that weighed on the market in 2015, 16, and 17. At the start of 2015, there was an estimated $300 billion in CMBS loans set to mature by the end of 2017. With new issuance that was still weak in the aftermath of the Great Recession. So this is what this issue about not as bad as it was in 2015, 16, and 17, and that there was $300 billion in CMBS loans back then. Well, this is where Mr. John Flynn comes in. What John Flynn alleges in his suit is that the NOI, or the net operating income of these malls and these facilities, was artificially inflated. Basically, they lied. They lied about how much money these commercial buildings are making. And they did that in order to lower the borrowing costs for these facilities. And he alleges that this happened in 2015, 16, and 17 during the previous wall of maturities. And a wall of maturities is basically when there is a large amount of debt coming due. All right. And there was a wall of maturities in 2015 that started when they refied all the debt in 2008 and 2009 after the global financial crisis. You see, the real estate collapse in 2008 and 2009 never hit the commercial real estate market. It hit the residential real estate market, but the commercial guys escaped somehow. They were able to refi their debt at a lower cost. And then that debt came due in 2015. And so Mr. Flynn alleges that in 2015, they lied about how much money they were making in these buildings. Now, when I say they, I mean the whole industry, right? All the banks that are creating these CMBSs, all the loan officers, right, the facilities themselves, they juked the numbers to make it look like these places make more money than they could. And in 2015, when interest rates were still very low, they were able to refinance all that debt by lying about their income. Well, now it's 2021, 2022, and now that debt, which was refied after the financial crisis, and then again in 2015 when they lied about their income, and now it's coming due again. Now, here's the thing. If interest rates are higher, now what do? Now they can't refi that debt at a lower cost because their costs are going up. The interest rates are going to be higher. What are they going to do? Are they going to lie again? Are they going to again further inflate their income statements at these malls and at these hotels, which, I stayed at the Marriott Marquis in downtown Atlanta yesterday. That was a castle of a hotel. My God, the place was huge. I remember looking over the railing and getting dizzy at how many floors there were. I think I was the only person in a room on my whole floor. That hotel was empty. There's no way that building is making any money. No way. The restaurants were empty. The bars were empty. The hotel was empty. Well, all of these loans, the billions of dollars of these loans, is coming due next year. And if interest rates go up, they may not be able to refinance and to borrow again to pay off the old debt. Now, here's the interesting thing. John Flynn, who is involved in this litigation right now as a whistleblower, he has alleged that all of these income statements for these malls and everything were changed to make their income artificially higher, and that they got away with it by making a couple of different, minor changes to make it look like it was something different. For example, if the address of the mall was 18 Main Street, and the income was, say, $100, random numbers, they would flip it around to, say, 81 Main Street, and they'd make it $105. So if you went looking for the same thing, they changed some minor little detail. And again, these CMBSs contain hundreds and hundreds of loans, right? So to go line by line through the data to catch this stuff is incredibly time consuming. But Flynn alleges that they did this on a grand scale and that they artificially inflated the income statements for these malls. And because of that, they were able to get beneficial terms for their loans, and they've been able to stay in business for 5 extra years. And now that is coming due again next year. Now, the interesting thing is the University of Texas did a study based on Mr. Flynn's suit, and they found that he was onto something. I don't have the details of it because I don't have it in front of me. But they found many, many cases of these minor little changes to the address or to the name being made to make the building sound like something different, and then the income statements were changed. Now, here's the thing. In every single case, the income statement was higher than the previous one. Now, if this was just an accident or if these were just data submission errors, then you would have an even distribution. Some would be lower, some would be higher, right? All of them were adjusted higher, which means it wasn't an accident. Somebody in the banking system has gone into these CMBSs, and by somebody, I mean the whole industry has done this. And they have artificially inflated the income of these buildings to make them look more profitable than they are, so that they can get favorable interest rates and so that they could sell these CMBSs to unsuspecting investors who don't realize what they're buying. Does this sound familiar, folks? Does this sound a little bit like the real estate market in the lead up to the global financial crisis? So, if the taper results in higher interest rates like I expect it will, and then the Fed starts tightening, I think it will show that this will be exposed, this fraud in the CMBS market. And I wish I knew more about this, and I wish I had more time to research this in more detail to be able to give you guys a better picture of what's going on. But to be honest with you, I'm only now beginning to get my head around it. So this is kind of the best I can do at the moment. But to answer that question, it will be the CMBS market is going to be the first to fail. And oh my goodness, I have gotten a lot of comments. We've got Zillogrand from Cosmo. Very good. I like that one. I decided not to get the bacon so I could get an extra ounce of silver today. Oh my goodness. No bacon. Well, it is silver. I don't know. Bacon, silver. That's a tough one. That's a tough one, Max. Things were great before Black Tuesday. Rich Dyer says, Silver Raid, Wall Street Silver. That's right, Rich Dyer. Today is November 5th. It is Silver Day. I wonder how many ounces are coming off the COMEX today. Interestingly enough, the inventory levels on COMEX Silver have been below 100 million ounces for some time now. They were around 97 million ounces. Getting closer to zero, folks. Just pointing that out. Devin Bryan's, nobody special. Why are precious metals up after the taper? That's an excellent question, Devin. I think, here, let me shrink me here because I had queued this one up to talk about it later because I figured it would come up. I think the taper was just already priced in. And if we look, this is about a 7 or an 8 month. No, this is a 1 year chart of silver here. Okay, let's get my melon head out of the way. And if you look, you see this big drop right here? This is June 14th, 15th, this big drop. This was the day Jerome Powell said, we're finally talking about a taper. We're finally thinking about tapering. And if you look, I mean, that sell-off started that day, and it took us down to a low of, looks like we were trading 2142 at one low. So what that was, that sell-off, besides being, your typical Sunday 11 p.m. price smashes and 8 a.m. price smashes, that was the market pricing in the taper. So as soon as Powell said talking about, the market got out in front of him and started pricing in the taper. And I think that's why we didn't see a big sell-off. Coincidentally, I think there were some people who wanted us to see a big sell-off, because if we look at a 1 month chart, look down here. Look at what happened here. Folks, this is a spoof down. This is on the 3rd, which was the day the taper was announced. Look at the sell-off in the morning and the buy right back up. Somebody spoofed us. Somebody in the morning convinced us that there was going to be a big sell-off on the taper news, and stop losses got triggered and people panic sold, or margin calls came in, and then someone bought it all right back up, and we've come back up ever since. So it looks like the bullion banks are not just juking us down anymore, that they're taking us back up too. So, and I mentioned this in Rob Keentz's live stream the other day. I asked him a question about the bullion banks being net neutral in the Commitment of Traders report, which it's something that happened pretty quietly over the last few weeks. Historically, the bullion banks have been massively short silver, so they've been incentivized to keep the price down. Well, they've changed their position. The bullion banks are now net neutral, and in some cases even net long silver. Now, they still have a lot of short positions, but they also have a lot of long positions, which means the bullion banks may be incentivized now to let prices rise. Now, there's two ways you could look at it. They could let prices rise, and then they could put their massive shorts back on and bring the price crashing down. Or they could let the price rise and they could cash in, right? They could let it run so that they profit. Maybe they've bought up enough of it. Now they're going to let the price rise. This could be the big one, as Rob Keens put it. All right? Maybe not, maybe. Who knows? But the bullion banks do not have the incentive to smash the price that they once did. So think about that what you will. But that's why I think that the market didn't sell off on the taper, at least why the precious metals didn't sell off on the taper. All right, let's read a couple more of these questions here. Conrad Olson, I have a bit of kinesis. Fees are charged for every transaction. Those fees are used to pay storage and holders fees. Hard to get fiat into it directly. Conrad, that was where my hangup was. I set up the account. It was tedious to set up the account. It was a lot of work. I was getting frustrated, and then I got to funding my account, and there was no ACH transfer funds into my account. There was just like wiring instructions on how to send your money, and they included some individual's name and address in Jakarta, Indonesia, which big time red flag to me, right? To me, that sounded like help your exiled Nigerian prince repatriate funds. That's the vibe I got from that, and I couldn't get past that, and I was doing this both as an experiment for myself and hoping I could make videos about it and recommend it to you guys, because, like, full disclosure, they have a referral program too, which as a YouTuber, that appeals to me, right? Like, I'm not above making money here, folks, but I will not recommend something I don't use myself. And I really wanted to be able to recommend kinesis, but I can't. Not when the only way to fund an account is to send money to some guy in Jakarta. I could not get past that. I'm not bad-mouthing the app. I think the app has amazing, amazing potential, right? The concept of holding gold and silver and earning a yield while you hold it instead of paying a storage fee, that's huge. I mean, if that catches on, that could be huge. And it definitely appeals to me, and I would totally use that. I could not get past the funding the account. Now, supposedly they're working on that. Supposedly in the very near future, they're going to resolve this issue of funding the account directly via ACH transfers. And if that's the case, I will fund my account, and I'll start using it, and I'll document my experience, and I'll let you guys know what I think. But that was my hang up, Conrad, was I couldn't get past the funding of the account. Thank you for your feedback based on your experience. Lynn William, I own a boatload of P-Silv. Are you selling this stock? No, I still hold my P-Silv. I'm holding it for now. Let's just put it that way. It'll probably be like the last thing I sell, to be honest with you, because I think that is a solid long-term hold. So it's one of the ways I own physical. I own physical. I own P-Silv. I own a little bit of mining stocks. I'm looking into Kinesis. I'm not adding to PSLV right now, but I'm not looking to sell it either. That's one I'm going to leave in place. That's part of my inflation hedge. In case I'm wrong about the market crash, I want to keep my inflation hedges in place, because as I'm raising cash, holding cash has a carrying cost, right? We have high inflation right now. So I'm losing purchasing power in the cash that I'm holding. So I'm holding onto my PSLV to offset that. Rich Dyer says copper and zinc will tank. I agree, Rich, wholeheartedly. That's why I went on Economic Ninja last week or 2 weeks ago to talk about that. Still, nobody is talking. No one in the mainstream press is talking about the silver supply being reduced by a collapse in copper and zinc demand because of China. As far as I know, I'm still the only one talking about it. So I should slap a patent on that thing and demand a nickel every time somebody says it, because eventually people are going to be talking about that. I'm early, but I'm not wrong. And that is going to be a huge story. I think the supply of silver is going to take a big hit. It won't happen overnight. It's going to happen slowly, but you're going to see these copper and zinc mines are going to start going out of business, and therefore the silver that they accidentally find or incidentally find is not going to be on the market anymore. And, if demand stays consistent, supply goes down, price goes up. Conrad Olson says PHYS raised $20 million yesterday as well. That's interesting. So they should be buying physical then if they raise the money. Drew 2F says, spooky. Has any of your DD on CMBS been influenced by the study from the University of Texas? If not, I can find it for you. Drew, I guess you sent that comment before I got to that point, but it seems Mr. Drew has done his DD, so congratulations, sir. I didn't see your comment when I mentioned the University of Texas study, but yeah, that was an aha moment. When I read about the University of Texas study, that tells me, okay, Mr. John Flynn is onto something. This isn't just one guy looking for a whistleblower payout. He's really onto something. They dump paper and buy physical. I agree, Rich. Drew 2F says, don't you think crypto and precious metals drop when the market goes down because of margin needing to be covered? Yes, Drew. I do think that's going to happen. I've been saying, to use an expression, baby thrown out with the bathwater, I do think we are going to see everything sell off when that market crash happens, because people who are shorts, or people who are being margin called, are going to have to sell their gold. They're going to have to sell their crypto to raise the cash to pay for their margin calls. And margin debt is at an all-time high in the U.S. right now. So there is a ton of people who have bought stocks on margin. When that market crash happens, they're going to have to sell whatever they can to raise the money to pay that. And yes, I think that will take down certainly gold and silver. Will that take down crypto? Probably. I can tell you, I still dollar cost average into gold and silver and Bitcoin. And that's just kind of, how do I phrase this? I do that on autopilot regardless of market conditions. That's a hedge against me being wrong, me being a lousy market timer. I'm not a market timer. I don't, sometimes I try to do it. Sometimes I get lucky. Sometimes I don't. But I dollar cost average into these inflation hedges just kind of on the side, as one strategy. And then I also, at my day job, I have my 401k that I'm always buying into the market that way. That's another strategy. And then in my brokerage account, I'm raising cash over there to position myself for the market correction. So I kind of compartmentalize my money. That's the way. Does that make sense? And I do it in these three different compartments. I've got my inflation hedges, I've got my 401k, and I've got my brokerage account. I do that so if any one does really well or does really poorly, I have the others to fall back on, right? If I short the heck out of the market and I'm wrong and I lose all my money, I've still got my 401k that's gone up. I've still got my inflation hedges, right? Or if I'm wrong about a deflationary market crash and hyperinflation starts tomorrow, I've still got my crypto and my precious metals. So I compartmentalize things. And I try to insulate myself and hedge myself against my own stupid decision making, because I have made stupid decisions in the past. And by not putting everything into one basket, I'm insulated from that. I hope that makes sense. So you may hear me say, I'm raising cash, but I'm also dollar cost averaging into Bitcoin. And do I think Bitcoin is going to sell off when the market crashes? Probably. But I'm still dollar cost averaging into Bitcoin because I could be wrong. So that's why. And also, long term, thinking out 10, 15 years, I think Bitcoin is going to be so much astronomically higher than it is right now that even a 20 or a 30% market correction in the short term will not even show up as a blip on the chart 10 years from now. Do you direct register your stocks in an effort to stop shorting? Okay, that you're talking about the DRS. I have not DRS'd yet. I have been reading about that. I know that's very popular in some of the Reddit groups, and I understand the reasoning behind it. When you DRS the stocks, it basically, you're guaranteeing that you're not holding a synthetic share. You're forcing whoever sold you a potentially synthetic share to go out and buy that share when you DRS your stocks. And I see why that's very powerful. I just haven't done the research on it as far as how liquid is it. If I do need to sell in a hurry, will I be able to? I'm not sure I want to lock into not being able to sell. I'm not against DRSing. I just I'm not convinced myself of it yet. I may end up doing it. I may not. It's one of those many things that I have on my list of stuff that needs further DD. But that is an excellent question, Lynn. Thank you. You sent a couple of good ones today. Thank you, Lynn. Drew 2F, Bitcoin dropped 45% in February, March 2020, so I think it's going to happen during the next crash too. It's a pretty good point, Drew. Gold and silver did the same thing. Let's just put it this way. If Bitcoin were to drop 45% again, I'd still be in the black on it. And Bitcoin could go up another 20 or 30,000 before that 45% drop, right? There's people who are saying 150,000 this calendar year. It's only like not even 2 months left in this calendar year. That's a little far-fetched to me. But to the point, like, we could double first, and then we could have the 45% drop. Or we could drop 45% from here. So I have my cash raised, and I have my dollar cost averaging into Bitcoin. So I'm positioned to at least partially benefit or be insulated against a failure either way. Right? So I want to emphasize the compartmentalization. I break it up into pieces, and I have different sets of rules and different approaches in each of my compartments, so I insulate myself from making bad decisions. For example, in my brokerage account this year, right? Like I talked about how I shorted the market in 2020 in the early years. Did really good, right? Made an 8x on that trade. And then I rolled those profits into mining stocks and gold and silver and did really well on that. I mean, I was just up massively, massively in August of last year. And then I kept those bets in precious metals in place and have just watched the value of that account erode, and whittle down. And I mean, I got clobbered this year in the silver space, especially on the big smash on February 2nd when they changed their own rules in silver squeeze, right? I learned hard lessons about leveraged bets on precious metals this year and how much money you can lose doing that. Now, that has been offset by my gains in Bitcoin, which have been massive. It's been offset by my gains in AMC, which have been massive. My gains in Dineos, which have done really well. A lot of other stocks so I have these differing sets of rules, and yeah, in extreme cases, they limit my potential gains. But this year, they have salvaged what otherwise would have been a terrible year, right? Because a lot of the massive gains I made last year between shorting the market and going heavy into precious metals, I lost a lot of that this year by staying too heavy in precious metals for too long. Which, by the way, there was a great channel, I cannot remember the name of it, but I saw a great video this week. Give me 1 second and I'll find it. About how our biggest mistakes are made when we're flying high. And I remember being very impressed with this video. Where is it? My goodness. I can't find it. Son of a. Okay, here we go. Her name was Anna. Where are you? Anna Hilberry was her channel. It's a new channel. I've never heard of it. Doesn't have a lot of subscribers. Anna Hilberry, Hilberry. And her whole video was, can you be too big to fail? And it reminded me a little bit of the video I did about challenging your own thinking and not living in an echo chamber, because I made some of the worst trades of my life were made while I was still riding high on my shorting of the market doing so well and my precious metals doing so well. And I found myself, in hindsight, I can see the error of it. I took too much risk when things were going too well, and I made a classic mistake, and I ended up losing a lot of money doing it. I got lucky. Other things offset those losses. But if I had been a little smarter, and if I had been a little more risk averse and a little more conscious of my own decision makings, I could have saved myself a lot of losses in that space. So anyways, check out that channel. It was Anna Hilberry is the name of the channel. Hilberry. Not a whole heck of a lot of content, but I enjoyed that video. And that's all. If you find yourself doing very well, do a double take. Ask yourself, are you taking on too much risk? Because there's a very powerful psychological urge to double down. And you're like, oh, I made all this money. If I place the same bet, I could double that money too. And that's when you lose. Always keep that in mind. Always challenge your thinking. All right. I say it a lot. I pay lip service to that. And then I don't always go do it myself in practice. So I need to work on that myself. I stay in trades too long. It's a classic mess up. Anyways, guys, it is 4:27. I've been going for a long time. I didn't get to half the topics I was going to cover, but I think I should probably call it. Real quick. Give me 5 more minutes because I can't. Look at all these windows I have open that I haven't even got to. My goodness. I talk too much. You guys need to keep me in check. Okay. Real quick. I want to talk about this article, Beijing's bond market meltdown brings hidden bills to light. Okay, I've mentioned in a couple of my videos in the past about off-balance sheet activities. And with this Kaiser Group failure yesterday, that was this off-balance sheet activities, these secret debts, whether they call them wealth management products or all these creative ways these companies have raised cash. When China put this 3 red lines policy in place to limit their borrowing, this is going to come back to haunt them, right? You hear numbers about, Evergrande owes $300 billion, there's $5 trillion of total bond market debt or whatever. We have no idea how big the China developer debt problem really is because they have hidden it. They've hidden it from their own government. They've hidden it from their own investors, from their own creditors. And yesterday's failure with Kaiser, which is one that we called on this channel, by we meaning me, here's me stroking my ego here. I called Kaiser back in, was it August or September? I said they were going to fall next. And they weren't next. There was like 6 other developers have failed since I made that call. But I knew they were next just based on the way they were reporting their earnings every month and how they were making it sound like they were doing so much better than they really were. The other thing I want to talk about is this story. And boy, this is going to be just murder for the Chinese real estate market. Xi Jinping is talking about a national property tax. Like, they don't have enough problems in the China real estate market right now. They're going to institute a national property tax. Now, keep in mind, they already have a national property tax in China effectually because you don't ever own your land. You only lease your land when you build a house on it in China. You lease it for 30 or 50 years. I don't know what exactly it is, right? So if you're only leasing the land for 50 years, then one way to look at that is there's a 2% annual property tax, right? Over the course of 50 years, you've paid the whole value of your land to the government. It's time to buy it again. So they're not talking about getting rid of that. The government is still going to own your land. You're going to have to rent it from them. But now they're talking about a property tax on top of that. Now, we've talked about how there's 90% home ownership in China and how there are these millions and millions of apartments that nobody lives in, that they're paid 40, 45 years of the average salary to buy. Now, they're going to owe taxes on that. So now there's going to be a carrying cost on that property. So all these people who bought second and third homes now have to pay taxes on those second and third homes that they bought. Now they're looking to sell them so they don't have to pay the taxes anymore, especially because the market stopped going up. They are going to cause such a stampede for the exits in the real estate market. And it looks like they're doing it on purpose. And I keep saying, man, if all the people in the press, I don't know why American press just loves to kiss the ring of the Chinese Communist Party. And they keep saying they're so powerful and they have absolute control over the country. They can handle any crisis. No, wrong. Because they have absolute control and because they do whatever the heck they want when they want, their ability to make this crisis worse is unlimited. That's the way to look at it. And that's what American press has got this wrong. The fact that China has absolute control over every aspect of their economy is not an asset during a crisis situation. All right? It's a major liability, and that's why China is going to take this bubble. They're going to try to deflate it slowly. They are going to pop it, and they're going to make it so much worse. And Xi Jinping talking about a property tax now, instituting a property tax now when the real estate market is already on the verge of collapse. Hey, good luck with that. Good luck with that, Winnie the Pooh. I think I just got myself banned in China when I said Winnie the Pooh. Sorry. Anyways, I really wanted to touch on that. I didn't want to wrap up this stream without talking about the situation with China Evergrande. Guys, I think we're going to call it there. Let's read a couple more comments real quick. Sorry, one more. What do you think of something like Dow Jones Commodity Index Copper 2X Inverse? I have used inverse ETFs, Drew, in the past. Keep in mind those inverse, any commodity ETF is going to have contango, right? Because there's a time element in futures. They're always decaying away. So if you zoom out on one of those charts, before you get involved in an inverse commodity ETF, do yourself a favor and take that chart to the maximum since fund inception and look what that thing has done. Okay, and keep in mind, if you're going to invest in something like that, you're swimming against that tide. So you need to be right in a big way. And even if you are right, look at times when copper prices have plummeted. Those ETFs have done well, but they haven't done nearly as well during those times as they've done badly during other times. So be very careful with those inverse commodity ETFs. Okay, I found, or my theory with the collapse of copper and the collapse of steel in China, I think silver is a great way to play that, because I think when those commodity prices crash, those mines are going to go out of business. And when those mines stop finding incidental silver, and more than half of the silver that comes out of the ground comes from copper and zinc mines, it's going to cause a collapse of the silver supply. That is the way I would play that one, by going long gold or silver. And you get the added benefit of an inflation hedge while you're at it. So you can kind of avoid that contango, which again, zoom out on those charts, man. Those inverse commodity ETFs are brutal over time. And it's not a tide I would want to be swimming against. Anyways, guys, thank you so much for your questions. Great questions. Thank you for the guys who are tweeting stories and tagging me. You guys are sending so much information my way. It is awesome. I get ideas for my videos this way. Thank you for doing that. Please keep those coming. I love when you guys do that. Keep the good questions coming. Thank you for everyone who sent me super chats for supporting the channel today. I appreciate that very much. Guys, don't forget, like and subscribe to my channel if you haven't already. How about a little word of mouth? Help get the word out. The channel's been growing great lately. It's been really fun to watch. I love doing this. I want to keep doing that. So please join me again sometime. All right. It is 4:34. The weekend is officially here. Remember, guys, do not eat the fungal dug. If you find yourself in the garden and you find a large underground fungal growth, don't take a bite out of it and then figure out what it is. Figure out what it is first. That's my public service announcement. Don't be like Colin from New Zealand. All right, guys. I I want to thank you for joining me. It's been fun. Till next time, live small,